Great, thanks, Eric. And just want to thank both Eric, Rich, and Chris for inviting me to present to you America's leading uranium mining company today, Uranium Energy Corp, in what is probably in an exciting commodity investing world. I want to talk to you a little bit about why uranium is probably going to be, has been and will be one of the best performing commodities going forward in the coming years. It all lies in green energy. It's been a theme throughout many of the presentations here, but nuclear energy has always been a baseload source of electricity, providing green carbon-free energy, baseload energy. But it's really been the broader realization of that amongst environmentalists, the political left and right, industrialists. Everyone's kind of coming around to the fact that if we do this green energy transition poorly, it's going to cost our economies, it's going to cost our quality of life, and even in Germany, the source of conflict vis-a-vis Ukraine and Russia, and I'll go into that a bit further. But uranium is the fuel for nuclear energy. It's 20% of our electricity. It's 55% of our carbon-free electricity in the United States. Here in Illinois, you're probably 50 to 60% of your electricity here comes from nuclear power. Why is nuclear being looked at in a different light? It's as clean and carbon-free as wind and solar. It's as safe as wind and solar. If you measure fatalities of every energy source back for the past 50 years, nuclear is the safest form of energy. But where it really differs is its baseload resiliency. Nuclear power runs 95% of the time. This is a great picture of Chicago in the polar vortex last year. But nuclear plants run 95% of the time. That's compared to wind and solar or intermittent renewables that run 30% of the time. So if we don't address our energy needs, we can't go 100% renewables without running into problems. And other countries have tried that, and we're beginning to see the results. Nuclear is also the lowest levelized cost of electricity on the grid, so it's not surprising that a number of nuclear power plants that have gone through life extension not once but twice. Here in Illinois, Byron, Dresden, plants like this have been given second lease on life as they've finally been recognized for that baseload carbon-free source of energy. And then public opinion. Public opinion now is decidedly in favor of nuclear power. If we break this down by political affiliation, I think the political right, the Republican Party, has always been supportive of nuclear energy as part of the overall mix. But we're now seeing Democrats favoring nuclear power by a 60% margin, and that's up from 37% over the last 4 years. And it's a realization of the role that nuclear can play in our decarbonization. Europe has made big strides. We have two of the largest countries in Europe, France, which is 75% nuclear, and Germany, which decided to go the other direction and phase out their nuclear power plants, make hundreds of billion-dollar investments in renewables. And what does it achieve them? They have electricity prices 50% higher than neighboring France. They're having reliability issues. They're burning more coal than they ever have, so they've made very little dent in carbon emissions, which was the whole point of their energy transition, and their reliance on Russian gas, which is causing geopolitical issues. It's causing them to not be as hard on Russia in terms of sanctions as they should be because of their reliance on natural gas from Russia. But the taxonomy discussion was a ruling in the European community just earlier this year, which has finally determined or considers nuclear a sustainable green investment for EU purposes. So this is a big breakthrough, and we're seeing growth in Central Europe, Finland, the UK in nuclear power. And it is quite a robust market. We've seen in the last 8-9 years, 62 reactors come online around the world, big reactors connected to the grid. We have 52 more under construction in 30, 40 countries around the world, all either advancing their nuclear power programs or going to nuclear energy for the first time. This represents 3% annual growth in uranium requirements going forward. We also have a new and exciting market, which is the small modular reactors, or SMRs, and these advanced reactors. Examples of these would be Bill Gates' natrium reactor with TerraPower that's going into the state of Wyoming on the site of a retiring coal-fired power plant. Other states like Idaho, Eastern Washington, Tennessee, up in Ontario, Canada, GE Hitachi. These are companies that are not making 1,600 megawatt reactors. It's the 50, 100, 200, 300 megawatt factory-built reactors shipped on site that can provide lower capital costs, shorter construction times, and in many cases are very similar to the naval reactors that we're all familiar with in aircraft carriers and submarines. So demand is in a wonderful place, growing at 3% per year. But we've had a production problem. We had uranium prices go from 2010 to around $70 a pound, all the way down to $17 a pound as a result of the supply and demand impacts from Fukushima. Yet production globally increased year over year all the way through to 2016. So we basically were producing too much uranium and adding to an oversupply. That changed dramatically in 2017, where we've lately now been producing 60 million pounds less than we've been consuming every year, and that has had a huge drawdown on the oversupply. A couple things have impacted that. COVID shut down 50% of global uranium mines for a period of time, but didn't impact the nuclear power plants. Sprott Physical Uranium Trust is a pure uranium investment which has taken over 50 million pounds of uranium off the market in the last year, which has really helped rebalance things. So we're now in a situation where we're not inventory driven anymore. We're back to needing production, and that depends on cost of production and lead times to get mines into operation. This is supply and demand outlook. So the green line and the shaded areas show the potential for increased growth over this 3% annual rate. The gray bars represent sort of existing, reasonably assured mines, and the black bars are secondary and inventories. So we have quite an appetite for new mine production coming in the latter part of this decade. Well, in uranium terms, that's tomorrow. And in fact, we're probably within the lead time to bring on the 8 to 10 mines that are probably needed in this time frame. So as an investor in uranium, would encourage you to look at mines that are fully permitted, licensed, have infrastructure that has a hedge against inflationary impacts. UEC is one of those companies. And this is a very busy slide, but on the yellow area under the blue line, that's total demand for uranium. The yellow areas represent what utilities need to buy. The bars on the bar chart on the right is showing how much they've contracted each year. So in the last 8-9 years, utilities have contracted for well below what they need going forward. They have been complacent. They haven't been worried about uranium supplies. Uranium has been very cheap, and the impression on their part was that it's abundant. That's changing dramatically now, and when they get back to contracting to the levels we saw in 2005 to 2010, we're really going to see a supply squeeze in uranium like we've never seen. If COVID and all these other impacts were not enough, the horrible invasion of Ukraine is having huge impacts on the uranium market. Here in the United States, we get 25% of the uranium enrichment services that enrich uranium to usable nuclear fuel, and 50% of our uranium, natural uranium concentrates come from Russia, Kazakhstan, and Uzbekistan. Within the United States Senate and House, there are two bills outstanding right now, one calling by Senator Barrasso for an immediate ban on Russian imports, Senator Manchin looking to do it, phase it in more over the next 3 years. But the bottom line is utilities that thought it was okay to contract with Russia, we became complacent again in kind of a globalist move. We thought it was okay to contract with Russia, but in retrospect, it was a huge risk management mistake. And so utilities, whether they're forced to stop buying from Russia or they just choose to stop buying from Russian sources, it really is going to put a premium on mines in places like Canada or the United States. And that leads to UEC. We're the leading uranium mining company with 2 production platforms in 2 of the best states in the U.S. for mine development, Texas and Wyoming. We are engaged in the low-cost ISR mining, which is an environmentally friendly way to mine uranium. It's very different than say, conventional open pit or underground mine. It's a very non-intrusive way to extract uranium. ESG, very friendly. But we've got a production profile now of 6.5 million pounds, which can be produced probably within the next 5 to 6 years at an annual rate. Very strong balance sheet, $127 million in cash, liquid assets, including uranium and shares and liquid equities, and a very significant uranium portfolio that I'll talk about. But the company today, we're traded on the New York Stock Exchange. We're probably one of the most liquid, heavily traded stocks. If you want to own one uranium company that gives you exposure to the uranium story, UEC is it. Trading 15, even 20 million shares a day as of late. It's a very straightforward story, very well known, in jurisdictions like Texas and Wyoming, which isn't Central Africa or Kazakhstan or Uzbekistan, and strong management teams and really low-cost, scalable assets. 297 million shares outstanding, fully diluted. We've been trading, I think we were up 77% year to date prior to the last 2 weeks where we've seen the broad sell-off in equities. If you're looking for a buy on the dip opportunity, we've been down close to 30-35% in the last 2 weeks, completely unrelated to our industry or our company. So a wonderful entry point. You'd be joining big institutions like BlackRock, Vanguard, State Street, Northern Trust, Warren Gilman, Li Ka-sheng out of Hong Kong, the world's China's richest billionaire, is a big shareholder. But we've also got a very significant and loyal retail shareholder base. We're uranium people. The men and women on the bottom line there have been engaged in exploration, development, construction of mining operations, and operating uranium mines for the last 30, 40 years. The management team, Mir Adnani, is a very well-known and entrepreneurial creator of successful companies, 2 successful uranium companies, UEC and Uranium Royalty Corp, which I'm also affiliated with, but also Gold Mining Inc. and Gold Royalty Corp. Spencer Abraham, you might recognize as the former Secretary of Energy in the George W. Bush administration, really useful in navigating the political landscape that we operate in uranium mining. And then my experience, I've been in uranium now 37 years. I've worked in senior management roles at 3 of the 4 largest uranium mining companies in the world, Cameco, Kazatomprom, Uranium One, but have really devoted the last 8 years or so in an entrepreneurial role with UEC and URC in building an emerging, growing uranium mining company. One thing that's unique about UEC is knowing how difficult it is, how hard it is to discover uranium, to develop and mine uranium, get it in the drum and sell it to an electric utility company. We saw that the prevailing spot price was well below global production costs. So we started a physical uranium program where we started acquiring uranium inventories and stockpiling them. To date, we have 5 million pounds of uranium inventory at an average cost of $38 a pound. Today, uranium is trading at about $54 a pound and has been fluctuating between $55 to $65 over the last few weeks. So it's really bolstered our balance sheet. It's improved our ability to market strategically to utilities. We can blend in purchased and produced pounds, but it also increases the availability of our Texas and Wyoming production for something that the U.S. government is establishing in the form of a strategic uranium stockpile, similar to oil strategic reserve. It's been slow to get stood up in the Department of Energy, but is intended to be a $1.5 billion program over 10 years. There's $75 million appropriated for this year to buy U.S. mined uranium. So if we can get a premium price for that government stockpile program, we can direct our production there and direct the purchased pounds to utilities. But we had a very significant milestone at the end of last year. We acquired the Uranium One assets in Wyoming from the Russian state atomic energy company Rosatom. This is the Uranium One that you all have heard about in the whole Clinton Foundation scandal and all the history around that. These assets in the heart of the Powder River Basin of Wyoming never should have gone to the Russian State Atomic Energy Company, but we're very proud as a Texas-based U.S. company to have repatriated those back into U.S. hands. So we acquired for $112 million in cash, but most importantly, it doubled our productive capacity in 3 categories: the actual processing plant infrastructure, permitted well fields where we're producing the uranium out of the ground, and the overall resource base in the U.S. doubled as a result of this acquisition. So as I said, we now have 2 production platforms, and in these slides you're going to see a common theme. I think one of or two of the presenters talked about infrastructure advantage in an inflationary environment. I can't stress this enough. I mean, if we were to build these processing facilities in Texas and Wyoming today, significantly, you're seeing all the major mining companies go over in their CapEx projections. We're fortunate to have these plant capacity in place. So surrounding the Wyoming hub and spoke, we have 7 satellite projects with 62 million pounds of resources to call on. In Texas, we've got 5 satellite projects, including the Burke Hollow project, which is, we continue to make significant discoveries of uranium on that project. But again, in the early stages, I would see us producing 2.5 million pounds out of Wyoming, 2 million pounds a year out of Texas, and ramping that up to 6.5 million pounds. The Irrigation and Christensen Ranch facilities, that's the infrastructure that we acquired from Uranium One. It also unlocked a 27 million pound project that we owned at Reno Creek, just 45 miles away. And again, we would have had to spend $60, $70 million to build a plant had we not acquired an existing one in our own backyard. The hub and spoke means just that. The hub being the processing plant, which produces uranium concentrates, or yellowcake, U308. And the satellite well fields are Christensen Ranch, Reno Creek, Moore Ranch, Ludeman. All of these are fully permitted, fully licensed. In some cases, like Christensen Ranch, fully constructed and operationally ready. So that's a huge advantage. It could take 6, 7, 8 years to permit and license a new mine in the United States. It's one of the shortcomings we have in the regulatory environment in the U.S., but we're fortunate to have production-ready assets. Same setup in Texas. The hub and spoke down there is centered around Hobson Processing Plant. This produces the yellowcake U308, and it calls on production from satellite well fields at Palangana, Burke Hollow, Goliad, Salvo, and Longhorn. Palangana is our most advanced project. We produced there up until 2013 and shut in because of the low uranium price. We did the responsible thing. Rather than blow out these valuable assets into a weak uranium market, we shut in, much like Cameco and Kazatomprom and the French and mines all around the world cut back their mine production as a result of low uranium prices. I mentioned in 2016, we started to really cut back production. That was as a result of hedges falling out of contract portfolios and producers doing the right thing to shut in. So we were one of the early movers in that regard, but we demonstrated our ability to produce at a production cost of all-in cost under $30 a pound from South Texas. Very great geology. It's consistent across all these assets. So could we replicate those costs today in an inflationary environment? Probably not. I think any mine that has a feasibility study or a PEA that's over a year old, you need to start over and throw it in the garbage and look at it again, because the cost of pipe, steel, PVC, labor, fuels, everything's gone up. The good news is we've got a lot of our infrastructure already in place. So we will be impacted by inflation, but not as much as our competitors. Burke Hollow is really our flagship down in South Texas. It's on a 20,000-acre private ranch. We have wonderful landowner relations. We have agreements to produce off their land and pay them royalties on their land. But this is a project that has only been half explored. We've discovered 7 million pounds on this trend. Easily can see that doubling or more as we move along this very defined trend on this ranch. Great geology, great grades, flow rates, everything else. So it's not surprising we've really advanced this project into production. We're building out the first production well field. We've added more rigs in the field as a result of the price going up recently. So the idea is to probably be up in production first in Wyoming, but followed very closely by Burke Hollow. And again, this represents one of the best new, this is a discovery we made, not something that has kind of been handed down from company to company, but is a brand new discovery that we're bringing fully into production here in the coming months. And ESG, no mining company can ignore the importance of ESG, both with your customers that want to buy uranium that's mined in a socially, environmentally acceptable manner, but with your investors. And we're having to demonstrate to the big institutional investors and retail investors that we're good stewards of the land. We're good relationships with stakeholders in the local communities. Fortunately, ISR is really can really score well in an ESG world. We don't have a lot of capital-intensive, energy-intensive operations where we're burning a lot of fossil fuels and things like that. Our electricity comes from largely wind farm adjacent to the operations and the nuclear power plant in South Texas. So we're looking forward to issuing our first ESG report and look to really embrace that as a competitive advantage going forward. And then finally, just summarizing, I think uranium is a funny commodity. We'll go through a 10-year bear market where no one wants to touch it or look at the space, and then suddenly, because it's not an efficient market or as liquid market like copper or gold or other commodities, uranium and nuclear energy falls back in favor and I think has strong legs under it. Many of you invested in the last bull market and made a fortune. I think a lot of the conditions that were present in 2005 to 2010 are here again today, but I think there's even more catalysts that are fueling this real nuclear renaissance that's underway and the need for uranium mining. So again, UEC is US-based, scalable, low cost, can be some of the fastest movers in the production area globally in the coming months, and we fully intend to move forward on that basis. So encourage you to look at UEC. We're traded on the NYSE as UEC, and also while you're at it, take a look at our sister company, Uranium Royalty Corp, which is UROY on the NASDAQ, and it's a diversified royalty and streaming company very similar to Franco-Nevada, Wheaton Precious Metals, Sandstorm, companies like that. But we're the only royalty company in the uranium space. So two different ways to invest in uranium, but pure plays in the uranium and nuclear energy story.